Okay, it's the 13th of Feb. It's a Thursday, and we've got about 30 minutes to the NY Open. Um, I'll get to the charts in a second. Yeah, okay, just a second. Okay, all right, let's start with the calendar. What have we got today? We've got PPI today. We've got PPI in an hour, so there's plenty of time for analysis. There's plenty of time for analysis. Um, yeah, so just give me a second. Okay, yeah, so we've got a whole hour for analysis, so we can take our time today, just like yesterday. Even tomorrow, it's the same thing. We've got retail sales. That's about 30 minutes after the NY Open, around 8:30 a.m. EST. So it's going to be the same thing tomorrow as well. We're going to wait for news. And as I've said, the reason I don't open any trades before news during the NY Open is because it's good sense to just wait. When you have the NY Open at 8 a.m. and then 30 minutes after that is a high impact news event, even if it's not a very important news event, it could have a bit of volume or liquidity in it. So it's better to always, it makes sense just to wait, right? And I do that only if it's a red folder on Forex Factory, right? Now, some of those red folders don't make sense. They should be like orange folders, like medium impact news. But on Forex Factory, some of them, those events are considered as high impact news. So whenever I see it as a red folder, so basically I have only red folders here. You can filter it out here. You can pick only the red one, and you don't have. Then you'll not see the medium impact and the low impact ones. Um, so when you do that, you'll see only the red folders, right? And some of these events aren't actually high impact news, but anyway, I still have them, and I do respect them if they're 30 minutes after the NY Open. Otherwise, I don't. All right. So on the daily price, yesterday we had a liquidity grab from that daily demand level, right there to the pip. We touched it, and we pushed up 450 pips. So the daily candle is about 440, 450 pips. The previous day was about 600 pips, and the day before that on Monday, about 570 pips. So we are averaging about 540 pips a day, right? So today we've moved about 223. So we still have a fair bit of volume. We should have a fair bit of volume left for the day. Um, Now, more importantly, we did a liquidity grab on the higher time frame. That's visible on the higher time frame. We'll get to the lower time frames in a bit. But on the high time frame, since we're on the daily right here, we had a liquidity grab on the high time frame. If you remember this, a liquidity grab on the daily, liquidity grab on the daily, right, to push up. So very similar to these two candles, this one, we had a liquidity grab, and we are trying to push up, right? So price could head to 29.29. That's the next level of resistance on the high time frame. I've marked it as weekly resistance here. It's not weekly resistance yet because I don't have a daily touchers yet to 29.29, right? So as I said, these three levels, this I drew today, 29.29, 28.82, and 28.34 are temporary, but they might move up and down plus or minus $1 to $5, right? And when I mean a dollar, basically is a 10 pip move on gold. So 10 to 50 pips, they might move up and down. I would like to see a few more touches, at least 3 to 4 touches, 3 touches on the daily time frame, or a couple of touches on the weekly time frame for me to have those lines permanently on my chart. Okay. Now, having said that, 2882 has worked brilliantly this week. We had a touch here, we have a touch here, then there is obviously price crossed here, and then it came back and touched here, and we have also had a touch here yesterday on the 4-hour time frame, right? So 2882 is a very good level already. But 29.29 is a new level. We're going to see what price does at that level, but I have marked it based off on the 4-hour chart. So that's why I said it's temporary, unlike these ones. These ones are kind of permanent. They more or less stay the same throughout the year, right? I don't kind of change them too much. So I've had these lines since I think February or March 2024. So it's been about a year now. I've had these lines on my chart and they've worked pretty well. Okay, so on the daily again, so we've rejected 2882 once again, pushed closed above 2900, came tapped to 900 today, right? I think we did. Did we tap 900? Yeah, almost tapped to 900.5. We almost tapped it and we're heading towards 29.29. Now there is not much of a daily wick on this candle. I'd like to see a longer tail or a longer wick before price heads up. So we could, at any point, there could be a pullback, create a bigger wick at the bottom, and then price could push up. Okay, but on the high time frame, on the daily and the weekly, and even on the 4-hour, we're very bullish, right? Let's look at the 1-hour. Yeah, even on the 1-hour, you can say that we're bullish. So right down from the weekly to the 1-hour, we're bullish. So it doesn't really makes sense in trying to sell in this market, at least based on the higher time frame, right? So I'm talking about from the weekly down to the 1-hour. We're very bullish. So based off on the high time frames, it's safer to be on the right side of the market. It's safer to call the right side of the market as to buy, right? As a buyer's market, basically for price to move up. Let's go to our trading chart. Before we get to our zones, let's do a quick recap of what the trade I took yesterday and also the setup that I did mention. So if you watch any of my streams, the last 10 minutes of the stream is when I've either taken a trade or when I give out setups, right? So if you just want to see the validity of these streams, see if I kind of know what I'm talking about, just watch the last 10 minutes of any stream, just the last 10-15 minutes at most. You don't need to spend any more time than that, 10 to 15 minutes. And then you can check the chart an hour, 2 hours later and see, or between an hour to 3 hours, and see if price did what I said it would do. Okay. So yesterday I took buys here, down here. That was based off on the 5-minute, and I mentioned this many times in the streams because we've had several NFP streams, we've had several CPI streams. I said on NFP and CPI, on these two events, I look at the 5-minute time frame, just these two events, right? I may look at the 15-minute, right? But because of the amount of volume that comes in, and because it comes in so quickly, because there's a lot of volatility, right, during those two news events, right? 5 minutes after the news event, or 10 minutes, or 15 minutes out, there's so much of volume and volatility that you might need to look at the 5-minute time frame. The 15-minute time frame might be a little too late, right? Because price is moving really fast because a lot of volume. Okay, so I did take, so when price dipped into this liquidity candle, this candle that we had marked several days before, we had marked this candle, I think maybe on Monday, price dipped perfectly into that candle, grab liquidity. If you go to the 5-minute chart, there is a a rejection and a 5-minute close, right? Soon as that happened and the next candle dipped, I took entries around here. Stop loss was about 50 pips, and I took partial TPs at around 75 pips, and then I let the rest run to about 225 pips, right? I got out somewhere here, just about here. I got out somewhere. There was M30 resistance around here. That's where I got off. Okay, so that was about a 225 pip move. I think somewhere from here to about here. Yeah, about 225 pips, right? That's what my final TP, and price then did reject, drop, and then continued higher for the rest of the NY session and the Asian session today. Okay, so that was a trade. And for those who were looking, who didn't get in on those buys and who wanted to, who are looking for buys, I said wait for. I gave out two ideas. I said wait for the H4 4-hour candle to close. So that was the 4-hour candle. Right, this was the candle that closed. So this candle opened 1700 hours IC markets over time. I said wait for the 4-hour, this 4-hour candle to close. So basically wait for the new one to open and then look for the pullback. So if you go down to the 15-minute time frame, because I said wait for M15 support to form and then take the trade. So on the 4-hour time frame, yeah, that was the support. So this was the close of, this was the open of the new candle, of the 4-hour candle. This candle right here, this 15-minute candle was the open on the new candle. Wait for 15-minute support to form, I said, and then take the trade. So that was the trade. So you could have put your stop loss under the 15-minute candle, under this candle, and taken the trade to run through all of these areas. And the reason for running through these areas, because we've already broken the liquidity candle high here. We've already crossed it. Once we cross it, there is no volume in this zone. We're heading to the next zone. So you can always take a trade here that's 84 pips and just hold it. Put your stops at break even or have your stop underneath that and let it run. Because usually when we have a liquidity grab like this, a very large wick, price will go through at least 1 to 2 opposing zones. So if there is a liquidity grab in demand, then price will go through at least 1 or 2 opposing supply zones. If there is a liquidity grab, such a big liquidity grab with a huge wick, when I say liquidity grab, I mean a big wick like this, right? That's a 130 pip wick. It could be a 100 pip wick. It's relative to the size of the candle. So if you see a huge wick like this that stands out, then it's very likely price is going to go in the opposite direction and go through a couple of zones, at least 1 to 2 zones in the opposite direction, right? And that's exactly what happened. Price went through and we came to this zone above. I also said for sells, I said if you are looking for sells in the next couple of hours, wait for clear M30 resistance to form, not for a bearish doji. This was a bearish doji. So this is not a clear M30 resistance, neither is this. There is no top wick here. So there was no M30 resistance, proper resistance, and price went right through. Okay, so let's get rid of all of this and start the process again. We did mark 2906. I just want to highlight this. So if you watch the first 30 minutes of any of my stream, just as like I said about the last 10 minutes, if you watch the first 30 minutes, that's when I do my analysis, right? So if you watch yesterday's, the first 30 minutes, you'll see that I marked 2906 and I said price should react to that 2906. Anything above that, we should touch it and react. And look what price did. Touch, react, push down 125 pips, right? Why 2906? Because of this wick. That's a liquidity candle. And when we tapped it, we had to react to it because that's liquidity, right? So tapped it, pushed down. That's why understanding liquidity is so important to understanding price action. There is no price action if there is no price action without liquidity, right? So if you want to learn price action, you have to learn liquidity. You have to understand how to identify, you have to understand the concept of liquidity, and you have to understand how to identify liquidity on a price chart. Then you'll have a better idea of price action. Okay, let's get rid of all of that. taking my time today because we have a lot of time for news, and we're not doing anything until news. 29.29. Just need to put that on the chart. That's the new level that I drew today. Just a second. Okay. Right. Let's get to work. Okay. So price has been very slow on its way up. Apart from yesterday's big move, these two 4-hour candles that moved 450 pips, just these two candles. But after that, price has moved 290 pips, 1, 2, 3, 4, 5, and it's taken 5 4-hour candles to do so. 290 pips, right? So 5, that's about 20 hours, and you have 2 hours, 2 4-hour candles, so that's 8 hours, and price moved 450 pips, right? So you can see price is slowing down a lot here. Okay. Okay, let's start with our demand zones. Okay, so we have a rally, 2 basin candles, and a rally, right? And 2 candles that move out of the zone. We're going to take a look at this on the 1 hour because there's a PR in right there. We're going to take a closer look at that area. I've always said that when you have a weekly SR level or a big round number, then it's better to always go down one time frame and take a closer look at that area and see if there is if you can refine that or fine tune that zone and make it better. Okay, so we're going to take a look at that in a bit. And here price dipped into this, so we broke this liquidity candle, can get rid of that, but the zone is still there, the zone is still valid. It's a large zone. We've come, it's a 230 pip zone, we've come 114 pips. So we've come almost to the 50% mark, but the zone is still valid because we haven't broken the zone yet. We have a drop and a rally here. We're going to mark that. Again, we're going to take a look at it on the 1 hour time frame, just because we don't have a base. I don't have a base here, and I always like to see a base. I'm going to bring this zone down here. Okay, this low is 422. 422. Okay. Right, we're going to take a look at these zones on the 1 hour. Right, on the 1 hour, we've got this. This is a basin candle. It's got a lot of wick and very little body, and I would take this zone up here. Save this. Let's go down to the 30-minute also. Yeah, that's better. Now it's clear. You have a drop, 1, 2, 3, 4, 5, 6 base in candles, and that's the leg out. That's the rally. The drop, 6 base in candles, and the rally. Drop base rally. And the open is 532. Okay, that's better. Let's look at the 1 hour on this above. Yeah, that's better right there. Yeah, so these are two zones basically. You have a rally, a base, and a rally. And you have a rally, 1, 2, 3, 4, 5, 6, 7, 8 base in candles and a rally. These two candles are the leg out. These are actually two zones, but on the 4 it is one zone, so I'm going to keep it as one zone. How big is that zone? 190 pips. Also 200 pips are quite big zones. Yeah, that's fine. Yeah. Let's split this into two zones. Yeah. So that's a rally, single base in candle rally. That's one zone there. Then prices come into it, so I didn't want to overlap it, so that's why I brought this zone down. Then you have a rally and 8 base in candles and then a rally. Okay, that's better. So let's put the numbers on here. 624, 358, 624, 358. This low is 688, 338. Okay, perfect. And we've covered about 500. Yeah, that's good enough for today. That's good enough. Yeah, 650 pips. That's plenty. Price is not going to come that far. Okay, so this is our closest 4-hour demand. Then there is a 4-hour demand zone there and a 4-hour demand zone here, right? You can consider this as a 1-hour demand zone, but that's a 4-hour demand zone because it's visible on the 4-hour. And down here is a 1-hour zone, and that's a 4-hour zone, right? It doesn't matter. It's demand. That's all that it matters, that it's demand. Okay. This one is still a high liquidity zone because we haven't crossed the 50% mark yet. The zone was 230 pips. I think we've come like 115 in it to it, 120. It was yeah, 236. Yeah, so just almost the 50% mark, or at the 50% mark. So we haven't crossed the 50% mark. So I'm going to keep this there, and I'm going to extend this liquidity candle to the right. Okay. And we drew this liquidity candle yesterday. I'm not going to redraw it now. Okay, so that's demand. Okay, that's the demand that we have today. Let's look at supply. Now there is nothing above this to the left because it's all-time highs. We're heading towards 2950. I've been saying this for a couple of weeks now. It's very likely that we head to 3000. Let's see what happens. Okay. Now we're going to have to redraw this on the 1 hour because price has come deep into the zone. That's 185 pips. Yeah, we've crossed the 50% mark again. So we should head out. There should be less liquidity in this. We should grab liquidity and push up today, or we just push up without grabbing liquidity. But we're due to head up today. Let's look at this on the 30-minute, maybe this zone, to fine tune this zone a bit. No, it's nothing. No, it's a 4-hour zone. Close 786. Okay. Yeah, 30-minute. This is the liquidity candle. I'm going to keep that because we haven't gone through it yet. It's still there. It's drawn on the 5-minute time frame, if I remember correct. Yeah, it's this candle right here, drawn on the 5-minute time frame. This is the candle. Okay, that's a liquidity candle. Price has already come, tap 2929 here, and we've crossed the 50% mark, so we should break that candle, but I'm going to keep it until it breaks. Yeah, that's it. That's once we break this high, this candle high, which is 2931.5, around 2931.5, there's nothing to stop price. We're heading straight to 2950, which is about 180, 190 pips away, 185 pips away. Yeah, we're heading straight to 2950 once we break that high. Let's take a look at this area again. There is nothing, there is no clear supply. Now there is no top wick here. Price is heading up. Yeah, we should break this high pretty easily. Let's put a price point there. 251. 251. Yeah, we should break that high pretty easily. 2922.5. There's no top wick. We should break that high pretty easily. Once you break that high and we break 2931.5, we're heading up. We're heading straight to 2950. Okay, but I want to be in that on that move, but I want price to pull back, grab liquidity, and then head up. 1 second. Okay. All right. So this is the NY open. We have to wait. We have to wait. We got another 30 minutes of waiting to do. Yeah, just clean up the chart. Nothing else to do until then. That's still supply. We haven't broken through it yet. That's 4-hour supply. We still keep this as a high liquidity zone because price hasn't gone past the 50% mark yet. That was the zone. 265 pip zone. We've moved about 67 pips into it, so still way below the 50% mark. Yeah, so it's gonna have to wait. Just a second. Okay, right. So the next step is you need to identify if these new zones that I've drawn, 3 zones, if they are high liquidity zones or not. Okay. So basically, if price has taken out an opposing zone, then it's a high liquidity zone. So let's go to the 1-hour time frame. It'll be clearer. Has this one taken out zone? Yes, it's taken out these highs. Yeah. So this move up has taken out this high there. There was a rally, a base, and a drop, and this move up took out that. You can see that move up took out that high. So this is a high liquidity zone. And is this a high liquidity zone? Prices come 16, 15 pips into it, 82 pip, yeah, taken out. This supply here, drop, base, drop, and prices moved up and taken out that. So that too is a high liquidity zone. And this one has taken out this supply, rally, 2 base in candles and a drop. And this candle took out those highs there, all right? So that too is a high liquidity zone. Okay. The next thing to do is to identify if price does come there, where can it grab liquidity? Where can it reverse? So it's got 2900. That's a liquidity area, but inside this candle, is there a liquidity candle, right? So basically, I'm looking for the largest candle, a bullish candle. That's the largest one. That's 122 pips. The rest are all smaller. Let's mark that candle out. 452. Let's go down to the 30-minute time frame. It's still the largest candle right there. 61. Let's go down to the 15. $77 pips. Yeah, so that's the largest one right there. 68, 77. Yeah. So 452694, 452694. Okay. And then down here, there is a wick here. Let's go to the 30-minute. Still the same wick, 15-minute. There is this candle here, 69, but there is this candle here. So 124 pip candle. Let's mark that. Let's go down to the 5-minute. $89, 58, 63. That one right there. That's a liquidity candle. So 450573. Okay. Yeah, and we are good. This covers about 300 pips downside. Let's mark a liquidity candle here as well, maybe for later on. I don't think price will drop that far, but we'll have it marked. The largest candle here obviously is this wick. The liquidity grab is this candle. Go down to the 15-minute. It's that candle right there. Let's go to the 5-minute. $98 pip candle. This one right here. Let's go down to the 1-minute. $51. Yeah, it's a fairly large zone. So yeah, we can have 2 liquidity candles there. 51. $51.5. 52. Yeah, this one right here. Yeah, this candle. 120602. 561587. 615. Okay, perfect. Right, we've covered a wide area, right? Price is not going to come that deep, but we've covered about a 600 pip range. So yeah, price has to get through all of these to be able to come down here, right? It has to get through this liquidity candle to 900, this one, this liquidity candle plus weekly SR level 2882, then this liquidity candle, then this to come down here, right? So that's two. That's a lot to do. It's not going to happen today. Anyway, now we've got another about 20 minutes for 18 minutes for news. The idea is that price pushes up. That's the idea, that we continue to push up. Just want to take a quick look at this supply area to see if we can tighten it down further. Yeah, not really, really. So the 30-minute. Yeah, maybe up to here. Close 22.14. Yeah, that's better. So basically what I did is I looked at the 30-minute time frame because I wanted to narrow it down. Price has already tapped it, right? And it's tapped exactly where I've narrowed it down to. 22, around 2922, right? Around 2922.2. That's where we've tapped in. That's where that supply zone is. You have a rally, a base, and a drop. So that's part of this larger zone. But I refined it because otherwise I would have to have it based on the 4-hour, which should have been down here. But I pushed it up there because I looked at the 1-hour, then there was nothing visible on the 1-hour. But on the 30-minute, I can see a clear base there. A rally, a base, that single basin candle, and a drop. So I narrowed the zone down to that, up to that zone, up to that, that basin candle. So we still have the liquidity candle here. That's untouched because price hasn't broken it yet. I still have that there, but the zone is now higher. So that's the zone. So now we've cut it down to about a 200 pip zone. It was initially a much larger zone on the 4-hour. Yeah, it was a 250 pip zone. Now we cut it by about 50 pips basically. Okay, so now we wait. We've got about 15 minutes to news. Is it? Yeah, about 15 minutes to news. I'll be back in a couple of minutes and then we'll look at what price did in the Asian session, the London session, so that we can have an idea what price might do during the NY session. Okay, but on the high time frame, we are bullish. Price is above the EMAs. We should be moving up. I would like to see a liquidity grab before it pushes up, right? So I would like to see price grab liquidity from further down before we head up. Is there a zone here? No, there's nothing here. If you can come here, then there is a push up. There's about a 200 pip move up. If you can come below these lows, grab liquidity from here, there's a 200 pip move up. All right, I'll be back in about 2-3 minutes. All right. Let's take a quick look at another 30-minute. Yeah, we should be pushing through this. It's very weak. There's no liquidity here. We've grabbed the liquidity already from this candle. Pushed down. We should be pushing up through these highs above 29.22. We should be pushing through it. I'd like to see a pullback first. All right. Let's go to the 50-minute time frame. Just see what price has done. That's the open. Yeah, that's the market open right there. So the market open was 2904, roughly 2904. So we have a very small bottom wick, about a 30 pip wick. That's what you'd see here. It's about a 30 pip wick, right? A daily candle wick, and that's what that is, right? That's that bottom wick. So price came down, created the Asian low, tested Asian high. Yeah. 052. Then we pushed up. That's the London high. That's the London low. It's the Asian high. Okay. 286. 083. 939. Yeah. Okay. So Asian session prices moved 220 pips. London session we've moved around 110 pips, right? So 200 pips in Asian session, roughly 220, and London session half of that 110, right? So not much volume in the London session, but quite a bit of volume in the Asian session. That's likely the spillover volume from the NY session that probably flowed into the Asian session. And in London session, we've just been ranging. So we are ranging basically for news because we have news in 6 minutes, right? So what price did was it opened here, pushed down, grabbed liquidity from this liquidity candle that we had marked, grabbed liquidity, pushed up, came back, grabbed liquidity again from that liquidity candle, pushed straight up, went into the liquidity candle on the left that we had drawn here. This 5-minute there's a 5-minute liquidity candle here that I'd marked, went into that, created the Asian high, pushed down, came back up, couldn't close above the Asian high. There was no volume. Pushed down, created the London low, pushed back up, tried to go back and close again above the London high, couldn't, pushed back down again. Right, it's pushing down again from London. So we're very ideally we're coming to the London low. Because we've rejected the London high here in pre-NY session, we've rejected the London high, so we're ideally coming below to the London low, and if we close below that, then we're coming to this liquidity candle or to this EMA here. So we should, if this candle closes, this 15-minute candle closes like this, we should push down another 50, 60, another 60 pips, even another 80 pips, probably another 80 pips down. We should push another 80 pips. We've grabbed liquidity here. Yeah, we could push down. Let's look at what price is done here. 1430, this one 1400. Yeah, so basically prices, this one broke this high, this one broke this high. We've created M30 resistance. Yeah, so we should come back up, grab liquidity, and kind of push down because we are coming towards the London low. Right, we're coming towards the London low. Yeah, this high 141796, 141. Yeah, we should be coming down. We're coming to the London low. We should, because we rejected the London high. We formed resistance. You can see that even the indicator showed M30 resistance here. It's very clear. We formed resistance here. But those are dojis. So this candle should close in 4 minutes, forming clear resistance. We should pull back up and come further down another 50, 60 pips. Let's see what happens. Let's see. So the news should be probably bad for the dollar. That's what it should come out as, bad for the dollar. So they're expecting good numbers. Let's see if we get bad numbers. We might get good numbers. We might get good numbers because core CPI, we got good numbers. So it's probably that we get good numbers. It's very likely that we get good numbers. Very likely we get good numbers. So if you get good numbers, that's good for the USD. Price should push down, right? We should get good numbers. Price should push down, and then later on we should have that push back up. So I will look to take oh, wow, that's too wide. Unless I target the Asian high, 66. Yeah. Just probably take sells. If price pushes back up here, I'll take sells. Stop loss above the Asian high for price to come down. That's the idea, because we are forming M30 resistance. The candle closed in 2 minutes. We have clear M30 resistance. We have a clear push down. What's the high of this candle? 1799 opens. Oh, there is no top wick on this candle. Ooh, there's no top wick on this candle. 1799, 1778. It might come up, and then yeah, we'll have to see. We'll have to see. We'll have to see if price pulls back up. I might just take sells. If you get to 2918, around 2918, stop loss above the Asian high, take sells to come down here. That's about 125 pip move. Let's see. if you can get it. A minute and a half more. But ideally, the correct trade would be, or the trade for the day would be the buys where price comes down, grabs liquidity, probably comes down here, creates a new low around 2900. So that would be a decent push down, and then grab liquidity and push up. That would be the move for the day, for price to go up. 50 seconds more. Okay, let's see. Anticipating sells. Good, should be good numbers. Yeah, it's as expected. So it's good for the US dollar. Price should push down. I've taken sells up here as price picked up. As I said, I'm going to hold it around here. Holding it here. 2907, around 2907. Yeah, around 2907. So as soon as this candle pushed up, I got in. I couldn't get in up here, but I did get in a bit, and I'm expecting 2907, and then eventually price to come. So let's mark this here, 2907. Then further down here, 2905. So can get there. That'll be a 107 pip move. Let's see. So we came to the London low as expected. We rejected the London high, came to the London low. Let me go back to the 15-minute time frame. There we go. So we've created clear 30-minute resistance now. Those two are dojis, so ignore those two candles. Now we have clear 30-minute resistance form. Safer stop loss would be above the Asian high. That would be the safer stop loss above the Asian high. So that high is 2286, 22, let's say, yeah, 86. We might have a pullback again. That's fine. Yeah, we might pull back up here again to this area. That's okay. Price might come above this candle. Now, how I'm going to manage risk on this is I'm going to wait for the 15-minute candle to close. Yeah, I'm going to wait for the 15-minute candle to close. if the 15-minute candle closes if a 15-minute candle closes above this resistance here, above this, right? 30 minutes, where is this open? 1808, close 1809, close 1807, 18008. Yeah, so if a 15-minute candle closes above this, above 1808, that's 30-minute resistance. A 15-minute candle closes up here, then I'm closing everything, because that means now there is the uh, the likelihood of price going down is cut by 50%, because we're in a uptrend, where price is in a heavy uptrend, and I've taken a counter trend trade because 30-minute resistance form, and because of all the reasons that I said, we rejected the London high. We are pushing down. We should come down to grab liquidity before we head up. All of those reasons. Price should not close back above 30-minute resistance or 15-minute candle. I'm looking at the 15-minute time frame, and the reason for looking at the 15-minute time frame is because this is a counter trend trade, so it's a lot more riskier trade than taking a trend trade like I did yesterday. So you can see the difference. Yesterday I took one because it was a high impact news event, unlike PPI today. It was CPI, and I said NFP and CPI are very high impact news events. Um, and you should look at you can look at the 5-minute or the 15-minute time frame. So I looked at the 5-minute time frame I took, but I took it on the 5-minute because I was taking a trade with the trend. Now I'm taking a trade against the trend. So as soon as I have a 15-minute candle close above a key area, above 30-minute resistance right there, that's 30-minute resistance formed. As soon as it closes above, that's it. I'm closing everything. There is no reason to hold, so I can get out with about a 30 pip risk instead of losing, let's say, 70 or 80 pips, right? It's all about losing less. We're pushing down, anticipating price to come to um, this area right here. We've touched these wicks. Let's see, I'd like to see a 5-minute close below the London low. A 5-minute close below that. If we close a 5-minute candle below that, then it's likely that we're coming further down. If we don't and reject this area, then it's also likely that we're heading up again. So got to be careful. Yeah, let's see where the 5-minute candle is going to close. It's nothing. It's just it's not decided yet. Price is just ranging. We wicked down, we wicked up, and we're back in the middle. We rejected the London low though, and we closed a 5-minute candle. So I'm going to be careful. I'm going to be very careful of this trade because it's a counter trend trade. I'm going to be very, very careful on this trade. That's the candle open. Price came above, grabbed liquidity above it, and then pushing down. Should come down. Should come down to this low, but let's see. If we don't tap the London low again, then it's very likely that we're going to close a 15-minute bull candle. I want to see price tap the London low and the lower time frames close below the London low. Otherwise, it's likely that we're going to close a 15-minute bull candle. The 15-minute candle has 5 minutes more, and if we don't come down here and tap this London low again, because we've tapped it only once, so if you don't come and tap it again, then it's likely that we're closing a bull candle, and then I'm going to close I'm going to manage risk. I'm going to close a couple of my trades. You got to follow logical risk management rules based on price action, because you got to keep in mind this is a counter trend trade, so you got to be a little bit more aggressive with your risk management because it's a counter trend trade. As I said at the beginning, the weekly, daily, 4-hour, 1 hour, they're all bullish. I've taken a counter trend trade here. You can, there's nothing wrong in taking it, as long as you know how to manage risk, and as long as your setup is based on logic, based on price action, formed with logic, but based on price action, then it's fine. And as long as you follow that same kind of logic every day when you look for trades, or when you look to manage risk, or when you look for your TP levels, or your stop loss, all of that has to be based off price action and logic. As long as you do that, you're fine. But in this case, I've taken it again. It's not based on emotions because I feel like price is going down. It's based off clear price action, right? We rejected the London high. We formed M30 resistance. I said price will come down to the London low. It did. Now I'm anticipating a move up, but I want to see price grab liquidity first. That is why I've taken the sells. I said the news will be positive. It is. It was just as the forecast. It came out as exactly as they were expecting the forecast, and that's why I took the sells for all those reasons, right? And also prices in supply in the liquidity candle. So for all those reasons, I stacked up all the odds, to make that decision, and I took sells, and I'm anticipating price to come down. Now, if it doesn't come down and touch this, then we're very likely going to close a bull candle, and then the next couple of minutes, and then I'm going to manage risk. Price has to come and touch this. If it doesn't, then this is the bottom wick to head up. And there's no need to hold drawdown. There's no need to hold a trade in drawdown. Yeah, we are closing bullish here. Another minute and about a minute and a half. We're closing bullish. You got to be careful. Price has to come and tap this low for it to continue down again. It's got to come and tap this low again. If it doesn't, then this means that's the bottom wick. That's also the 5-minute bottom wick, and we're pushing up. Another minute more. Yeah, we're pushing up. I'm going to close some positions here. Let's see how the 5-minute candle closes. Yeah, we're closing bullish. 15-minute candle is closing bullish, forming. Yep. We have a doji, 5-minute doji. Okay, I'm going to wait. We have a 15-minute doji. That's why I was looking at the 5-minute because if the 5-minute close the doji, because this was the open, right? So if the 5-minute close the doji, it is very likely for the 15-minute also to be a doji, and that's exactly what we have. We have a doji here. So a doji means there is no information on this candle. So we have to go by what does the previous candle say? The previous candle says that we're bearish. So we have to wait. We got to wait for maybe another 15-minute candle. We have to wait because we have no information. This 5-minute candle provides no information, right? It opened and closed at almost the same price. It's just a bullish doji. It's hardly any information on that candle. And that's the same for the 15-minute candle also. They opened and closed almost at the same price. We've rejected at the top, we've rejected at the bottom. So no information on that candle. So there's a 50% chance of price going down, a 50% chance of price going up because there is no information on this candle, right? But if you look at the previous candle, they're still bearish. So I'm gonna wait. I'm gonna wait for maybe this 5-minute candle to close. Let's see how this candle. If this candle also closes bullish, closes up here, maybe then I'll manage risk. Maybe. Because I don't want to hold my trades in drawdown while price comes here. Yeah, does that make sense? If you hate drawdown, I would say that you are about 30 to 40% there in terms of becoming a consistently profitable trader if you hate drawdown. If you hate looking at drawdown, if you just absolutely despise drawdown, looking at drawdown, if you just hate it, and because you hate it, you do something about it, you close partial positions, close 25%, 40%, 50%, 60% of your trade as soon as you see drawdown, then I would say you're 30 to 40% um, already there towards your goal of becoming a consistently profitable trader. Because that's what traders struggle the most with. You know, retail traders have this concept of hold and hope, hold and hope, hold and hope that price will eventually go in your direction. That's never worked for me. I don't know of any trader honestly that kind of um, thinking has worked for them and they've been profitable with that kind of that kind of mentality, profitable for a long time. Okay, so as I said, I want to see another tap of the London low. If we tap, it's likely that we should close also, right? This is the London low, 2909, around 2909.5. Right? I want to see another tap there. If we tap, it's likely that the 5-minute will close below. That would be great. That means we're heading towards the liquidity candle. So this is about 128 pips away. That's my final TP around 2902 or 2903, right? Because that's the Asian low. So we should, let's see if we can get there. Okay, we've tapped it. Perfect. We've tapped it. We should close either this candle or the next candle should close below it. We tapped it once. We tapped it a second time. We should close below it. We should, if you break this low, if this 5-minute candle breaks the low, then we are going to close below it and we're heading down. Now remember what I said at the beginning. The what I'm expecting is a bullish move, right? Could be later on, could be in the next hour, could be in the next couple of hours, but what I'm expecting is a bullish move. This should be a liquidity grab for us to push up, right? So this trade is a counter trend trade. Keep that in mind, it's a counter trend trade. It's a very risky counter trend trade. I've been saying this from the beginning. Okay, now we broke the low, right? We broke the low, perfect. So now we're heading down. This candle should close below the London low. It's got about 3.5 minutes to do so. Let's see if we get there. Yeah, we should break this low also. Doesn't matter if you break this low or not because price has now broken this low. This was the second tap into that London low. We broke on the low. We should close below the London low. The London low is this low right here, 2909.39 or around 2909.50. If you work with round numbers, that 2909, you want to see a close below 2909.50, a 5-minute close below that. We're heading down. How much volume have we had in the NY Open? 49, not much. Yeah, 55, not much. This is, I don't count this because that's a doji and also that's the news candle. So roughly about 40 pip candles, right? Roughly about 40 pip candles, 49, 45 pip candles. There we go. We broke the low. So this one also, yeah, I should get to about 45 pips. There we go. Yep, there we go. Okay, I've kept one position open. I'm going to bring my stops to break even here. I use this trade manager to do so, so it's very easy. Stops at break even, and now it's a risk-free trade. Yeah. So the initial stop loss was up there, but it was obviously I was going to manage risk. I would have never let it get there. I would have had I had about 30 pips in mind roughly because based on price action, it was 30 pips. Not that I had 30 pips in mind. All the decisions are based off price action. So according to price action, I would have had roughly about 25 to 30 pip stop loss, and we have come about 99, almost 100 pips, right? Because that was where my entry is, 100 pips, and I'm expecting price to drop to 2905 and then roughly around 2903, 2902. Okay, so that's a final TP around 2902, 2903. Let's see if we get there. Yeah. And that's it. Sells today, even though the high time frames were all pointing up weekly, daily, 4-hour, 1-hour, all were pointing up. If you're a session trader, you still can take sells. There's nothing wrong with it. Some traders say, I've got a bias, everything is pointing up, I'm going to only look for buys. You got to be fluid. You got to understand price action not only for the high time frames, but also for the lower time frames, because for the session that you're trading, right? If you're a session trader, and I trade just 2 hours, 2.5 hours of the New York Open, then you got to understand the price action for those 2 hours. How candles are printing, what's printing. You got to be able to read those candles, right? Based off a logical system. So I use supply demand. That's my core strategy, is supply demand. I also use support resistance, right, for on the 30-minute time frame. Sometimes on the 4-hour, I see if we've created support or resistance. If you watch my streams, it's pretty clear how I trade. And then I have an entry method. My entry method is the M15 fib model. I use the M15 fib model as my entry method. So I see that from 1400 hours onwards, we've broken 2 highs. This candle has broken this side. This one has broken this side. So price did come close to it. That's where kind of I wanted to enter, but I couldn't get entry there. I opened trades, and the broker, there was a slippage of about 18 pips, 18, 19 pips. That's fine. That's expected during news. So it came very close to my ideal entry around 2918, but it didn't come up all the way there. So that is another sign that that this fib, this fib is working. And where should price come down to? To the where should price come down to? Where are your TPs? The TPs are at liquidity areas, right? So the liquidity area, we had already touched this. We have already touched the first EMA. So the next liquidity area is the second EMA. And then one after that, so that's around where I got off. I got out around 2907. That's where I got out, where that second, exactly where that second EMA is, just around that area. That's where I took partial position. So that was about 85 pips, right? And now my final TP again is at a very logical area. It's at the liquidity candle, right? So this is the liquidity candle. This is the liquidity candle right here, and my TP is just there, right? Not at the top. You can have it at around 2905. You can take partial positions at 2905, but I have it around 2903, just where this M30 support is, right? Where we have created, where there is, you can see this, there's M30 support and there's a SR level right here. That's where my area is. Okay. I might close everything at 2905. Let's see what I see on the 1 minute or the 5-minute time frame. The 1 minute we are still pushing down. Now again, the idea for the day, or the trade to look for the next. Again, I'm not going to be here for a full 2 hours because I've kind of taken my trade, but I'm going to give out a setup just like I did yesterday, just like I do every day, right? So the setup to look for today is buys. That's the setup to look for, right? The sells have already happened. This was the move. Price has moved 115 pips already. The sells are done. This is the move down, right? Unless price comes back up, creates M30 resistance and pushes down again, right? There's a less likelihood of that happening, and the reason for that is because we've already tapped demand. If we hadn't tapped demand, maybe price would have, if we stopped here, maybe we would have pulled back up, created some sort of resistance on the M15 or the M30. You would want to see M30 because you're taking a counter trend trade. So you'd want to see M30 resistance form and price to come down, but we've already tapped the demand level. So it's unlikely that's going to happen, but it still can. There are no certainties in trading, as I always say. It still can happen. You can still, price can pull back up, grab liquidity again, and head down again. That's very possible, right? But the likelihood of that happening is less. So the trade to look for are buys, not sells, right? Because you want to see NYSE after NYSE open. You want to look for M30 support to form because price is now bearish on the as a session trader on the 30-minute time frame. We're bearish, right? Also on the 1 hour, we've closed a heavy bearish candle, 1 hour candle. Okay, just closed there, and it closed under the London low. So we should push further down. So that is why I have it around 2903 or 2902 is my final TP. That's about 100 and how much is that? 120, about 130 pips, right? 130 pips is my final TP. But the trade that you would want to look for are buys. We're bearish now on the 1 hour, we're bearish on the 30-minute, we're bearish on the 15-minute. So as a session trader, you want to see 30-minute support form at a liquidity area. Okay, it's the same thing. When I say key area, when I say liquidity area, it's the same thing. You want to wait for, not look for, you want to wait for 30-minute support to form at a liquidity area, at any one of these liquidity areas. Okay, I keep putting this chart up on the stream. At any one of these, I've explained what these are many times over. So basically there are 5 areas of liquidity that I consider on a price chart. There may be more, I don't know about them, but there are 5 areas that I consider. The liquidity candle is one, the BRN is another, weekly SR levels are another, right? And the EMAs, okay, the EMAs and the EMA crossovers, and the EMAs cross each other, right? So wait at any one of those areas. Now we are at one of them already, right? We're at one of them. We've tapped the EMA. So if we form M30 support here, then there's a possibility the price could now head up, right? So I will basically, because I'm in a counter trend trade, soon as I see M15 support form, not a doji like this, not a doji, but soon as I see clear M15 support, maybe a candle like this, or 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 like this, or like even like this, right? If I see M15 support form, right, then I want to close my trade. Because why? Because it's a counter trend trade, so you got to be a little more aggressive with your risk management. If I was taking a trade with the trend, if I was in a buy trade, then I wouldn't wait for, let's say I was in a buy trade, I wouldn't manage my risk maybe when M15 resistance forms, okay? Because I'm a counter trend trader, I'd want to see M30 resistance form, a higher time frame form against me for me to manage risk, right? If I was in profit, if I'd taken a buy here and price was up here, I'd taken my entries down here, price was up here, and we formed M15 resistance, I will maybe not close my positions or manage risk. Probably wait for 30-minute resistance to form. I've said this many times. Soon as you see 30-minute resistance form against you, that means there is the likelihood of price going in your favor now is cut by 50%. So you got to cut positions. You have to manage risk. So I'm going to wait for this 15-minute candle to close, and then also end the stream. I'm not going to be here for NYSE Open, but I've given out the idea, right? So I'll probably personally, what I'm going to do is I'm going to put an alert at around just above 2900, and also just above this liquidity candle here, and see if price gets there. If it gets there, I'll come back to the chart and see what kind of price action I have. If we form M30 support, then it's likely that I'll take another trade because this trade has been profitable. I might take a second trade today. I might, not sure about it. I usually, when I have a win, I kind of stop trading after that, but let's see. Because I believe, as I said, high time frames are bullish. We should be grabbing liquidity and moving up today. and we're going to grab liquidity from one of the five liquidity areas. Okay, so we already tapped one, so I'm going to see what happens here. I pay close attention. That's why I'm waiting for the 15-minute candle to close. Soon as we close a bullish candle here, that's it. It's non-negotiable. I close the trade because it's a counter trend trade. Even if price pushes down, after it closes a bullish candle, a strong bullish candle, if price pushes down, that's fine. That's absolutely fine. You got to manage risk because the likelihood of price going against me now is there's more likely. There's a the likelihood of price going in my direction is cut by half as soon as I see a 15-minute candle close against me, a bullish confirmed 15-minute support candle for 15-minute support form against me, a strong bullish candle form against me, because I'm in a counter trend trade. Eight minutes more. So in 8 minutes, that'll also be the end of the stream. And if we close like this, if the candle closes bullish like this, then that's it. I close everything. If it closes a doji, like this candle, or like this candle, that's a doji, that's a doji. If it closes like that, then I'm going to leave the trade and watch the next 15-minute candle. But if it closes bullish up here, the candle opened here, if it closes anywhere above, so basically if it closes above the London low, then it'll be a strong bullish candle. If it closes below the London low, it's likely that prices will close a 15-minute bullish doji, right? So then I'm going to leave the trade as is, because my stop's at break even. I'm not going to do anything, leave it as is. But if it closes back above the London low, then I'm closing the trade. Even though I have stops at break even, I'm going to close the trade because I don't want price to come and hit my stop loss. That's how you manage risk, based on logic, right? And that is why I spend 30 minutes to drawing these zones and going over what happened in the Asian session, the London session, because I want to have a clear understanding. I want as much information, price action based information that I can have to make a decision, either in entering a trade, or in placing my stop loss, or in taking profit, partial profit, or in managing risk. In all these four aspects, I need to have a clear understanding of what price has done so far and what it could possibly do. Right? That's the reason. That's why 30 minutes of prep work is vital, crucial if you want to trade price action. 5 minutes. Well, let's see what happens. So again, very simple. 15-minute candle closes above the London low. I close this position that I have open, closes below, I keep the trade and I let it run. But for buys, you gotta wait for 30-minute support to form. Clear 30-minute support, right? You want to see a bullish candle like this, um, or like that, or like that, not a doji, or like that, or even like that. A clear bull candle form, 30-minute bull candle form, from a liquidity area, from either the EMA, the liquidity candle, the BRN, any one of those. Yeah, I think we're gonna close bullish. Yeah, we're pushing up. Give it a couple more minutes. Yeah, we're closing. Yeah, we're closing bullish. 2 minutes, 3 minutes more. Yeah. Let's wait for the last 2 minutes. Then I'll manage risk. I'll close this position. So we tapped here though. We tapped 2907, the EMA. That was a 85 pip move, around 85, 88 pip move. But now we are pushing up. Yeah, also once we break this high, then that's it. Then there's a long wick there. Price is gonna trade into that wick. Yeah, we're closing above the London low. Unlikely that we're going to go down and turn bearish now. Just a minute and a half. Yeah, just a minute more, and we are closing bullish above the London low. Yeah, closed it. Just a few seconds more. It's unlikely that we're going to close bearish. It could, but it seems like we're closing above. Yeah, so that's it. Yeah, we're closing above. But again, this is no reason to look for buys right now. We've got to wait for 30-minute support to form. Got to wait for the 30-minute candle to close. Another 15 minutes for that. Yeah, so the 15-minute candle closed above the London low again. So there's no reason to hold the trade. Closed it. That's it. Right? See? Very simple. Got to follow. If you follow uh, price action based, uh, if you manage risk based on price action, if you follow the same logic to do that every single day, you're 40% there. All right, so that's the end of the stream. Again, the setup for today is buys, not sells. Uh, we're getting close to the NYSE Open. You want to wait for M30 support to form. Wait for 30-minute support to form. The 4-hour candle is going to close in 44 minutes. We should close up here. We should turn bullish and close up here, right? So wait for 30-minute support to form to look for those buys, right? Stop loss, a more aggressive stop loss could be placed under the 30-minute candle low that created support. A safer stop loss, you could place it under this liquidity candle here, right? Under this candle here, under 2897 basically, under 2897, right? Safer stop loss under 2897, more aggressive stop loss under the 30-minute candle that created low, if this is the 30-minute candle that created support, right? If this closes a doji, then wait for 30-minute support to form. Okay, this candle has to close a strong bullish candle because it's tapped one of the liquidity areas, one of the areas which is the EMA. So you got to wait for 30-minute support, clear 30-minute support to form, and then look for the next candle to pull back, take the buys. Where are we heading? We should be heading to the Asian high. This candle has no top wick, so we should be heading at least to 2922, right? So that's about 100, 115, 120 pip move up. Okay, if this closes a bullish candle, the next one should pull back a bit, so you should get at least 120 pips or higher. The next area would be 2929, right? So around 2929 or 2928, if you get, that's about 175, 180 pip move. And then once we break this high, which is 2931.5, around 2931.5, then we're heading to 2950, right? Now that may happen today or it may happen tomorrow. Depends on how much volume there is for the rest of the day. The candle is, we've traded, daily candle is trading at 223 pips. So can we head towards, yeah, it's possible to make a 490 pip candle, but there's not a lot of volume today. Because if you look at the 15-minute time frame, if you look at the NY Open, we've not had a lot of volume, right? Around 45 pips, that's a 50 pip candle. That's a 50 pip candle. Ignore the news candle. Yeah, okay. So we've had about ranging about 50 pips, right? Which is okay. It's not great. Great is when the 15-minute candles are around 75 pips or 80 pips or 85 pips. That's great. But 50 pips is okay. So we might have decent volume to push up to 2929 or even higher to around 2940, right? But wait for that 30-minute support to form. Don't do anything until you see clear 30-minute support form. All right, that's it. Yeah, that's it. All right. See you guys tomorrow, 7:30 a.m. EST. Take care.